All right, as we have a little bit of weakness heading into the end of this week, I'm going to forewarn you that I won't be available next week. Now, in the past, that has meant a lot of times a lot of volatility, but I don't think that will be the case next week. I'm going on vacation here next week, so I won't be doing it. We won't have any market outlook videos on Monday, Wednesday, or Friday. There will be the normal videos on Tuesday or Thursday that Brandon will do. So when you don't see a video posted on Monday, Wednesday, or Friday, that's because I'm out of town and I'll be back the following Monday. So I'm going to break down what to expect next week. And then going forward after that, based on what these indicators are telling us and how we finished up this week. I'm also going to break down a sector, an industry within a sector, strong sector, but an industry that's really looking poor, and what we can do with that industry with our trade idea today. So let's go ahead and get started. Today is Friday, October the 18th, 2019. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's go ahead and take a look at the S&P 500 with the market forecast indicator. And you notice, we got a little bit of a pullback today, and we talked about that on Wednesday. We had a bounce yesterday, low volume, but a pullback today, filling in some gaps. You'll see here in a minute, pulling back down to. So this is the last intermediate run, so we can go ahead and probably close this one off. That was the intermediate retracement levels from the prior intermediate run, so we'll remove that one now. But this is the last intermediate run we had, which pretty much consisted of one big near-term rally and a bunch of little ones that really didn't mean one more, really. Two near-term rallies, and one was a really short one that did not get the new highs. So it's kind of a one-trick pony here. But you can see this little pullback got us back down to the 23%. Again, breaking through the 23% Fibonacci retracement back up is really a good sign in terms of things turning around. We got that on Tuesday. And then, a little bit of weakness the rest of the week. A little bit of weakness on Wednesday, up yesterday, low volume, back down today, potentially back down Monday and Tuesday. We might come back down to this 29.50 level, which would be the filling in the rest of that gap from essentially last Friday's gap up to the upside. So don't be surprised if that ends up being the case. Or we can probably just come down here where we get a red arrow or yellow line and maybe light pink shading. And remember, that's a bullish pattern, yellow line of light pink shading. Now, it also leads eventually to bearishness, but assuming that this is the beginning of an intermediate run, we wouldn't expect more bearishness. We'd expect a brief dip, and you can kind of see if I go out just for some perspective, we'd expect something like this, right? A yellow line or this over here, a yellow line and light pink shading, and we get going again. Over here, a yellow line, light pink shading, we get going again. So we might get that, say maybe Monday or Tuesday, maybe, right? This might be it. This might be all the weakness we get down to the 23% level, hold it, since we broke through, hold it, and then bounce back up, and away we go. We might just break down on an intraday basis and not finish below the line. So it stays green, if it stays above it. So either way, we're getting a little bit of weakness into the end of the week after a strong start to the week. We might get a little weakness at the beginning of next week before a strong finish to the week. Wouldn't be out of the realm of possibility whatsoever. So if you take a look at the Russell 2000, you can see we're 11 hundredths of a point away from the intermediate, from the dark green shading and the green line here, finishing up above the moving average. So the Russell 2000 is finally caught up to what the S&P 500 is doing. That's a good sign, right? We want to see the Russell 2000 get bullish. We wanted to see it be more bullish than the S&P, at least at the beginning of the intermediate run. Maybe by the end of it, one sign of a maturing intermediate run is, small caps start to underperform. So at the beginning of it, we'd like to see small caps kind of take off and get going, catch up, take off, get going, and outperform the S&P 500. The Dow Jones, it's light pink shading. Actually has a red line because it's dipped down a little bit there, but you can see the similar pattern, and that's the kind of pattern I would expect us to see. Keep in mind that's largely Boeing. The Dow Jones is a price-weighted average, so higher price stocks have a bigger weighting in a 30 stock average. So it's not quite the same. That's why you don't see the same weakness in the S&P. That is an extreme low on the momentum line, but when you only have 30 stocks, you tend to get more extremes than you do when you have a 500 stock average. You look at the NASDAQ composite. You got the yellow line there. It dipped down a little bit. Depending upon what kind of weakness when the near-term line pulls back below 50 on this line. So that's kind of the expectation is Monday or Tuesday. We'll get that near-term line below 50, produce a higher near-term low point compared to the last one we had right here on all of these indexes, right? The last one, the S&P, was right here. So produce a higher near-term low point. Even if it got all the way to 2950, that would still be a higher near-term low than the last one we had. Bounce off of that, away we go back up to above the 23%, and away we go to the upside. So that's kind of my expectation based on how I'm reading these. You can also see, just a reminder, on the weekly chart, we have strong bullish posture on the intermediate line, and the near-term line produced its own bullish low point. In fact, these are the last two near-term lows. The one before that was over here. So we've been progressively getting higher near-term low points, and this one with the long lower shadow is a relatively bullish near-term low point. If we close next week above, that high point of 29.92, then again, away we go up to the upside. Okay, before we look at some other charts, I invite you to subscribe to our YouTube channel. We're almost to actually subscriber number 5,000, so we're getting really, really close on a channel that we just barely started when Brandon and I left our TD Ameritrade, left our former employer and broke out on our own. So subscribe to our channel so you can get notified when these videos are posted. There's a logo right there in the bottom right corner of your screen. Hit that logo. There's a red subscribe button that pops out. There's also one down below the video. Just hit the red subscribe. Also hit the thumbs up icon down there. That's our survey. That's how we see what you think about our videos. It takes one click. If you want us to do the video again on Monday or Tuesday in this case, as I mentioned before, then let us know. Do it with one click down there. That's the most important feedback we get, is whether or not you want us to do it again. Right? So, and the way we know that is not by whether you watched it, because we get a lot of people that watch it. It's whether or not you'll watch it again, and that's what the thumbs up icon tells us. Also, while you're down there, comment, what did you get out of the video today? Join our Market Scholars website for free. There's a link popping out right there in the top right corner of your screen. Click on that link, subscribe to our site. You get access to our Market Outlook forum and our community. You also get access to our market commentary section of our blog, as well as webinars when we have those. You can do that, again, like I said, for free. Follow me on Twitter for more content in between these videos, and join our Market Outlook Facebook group that we've created. We get asked all the time to follow up on the trade ideas that we put out here in our Market Outlook videos. If that interests you, that's what this video is here, the Market Outlook live trade video. It's we go back and review all the trades that we ever do. We trade them all the way to their close. We teach, that's the best educational value you can get, is to watch us over our shoulder and learn about what we do as we talk about what we do, why we do it, how we do it. So that's what that video is there. Again, you get access to that video with our monthly plus subscription plan. There's some details on that with this link above your video here. You also get access to all of our trading rooms, in addition to those Market Outlook Lives when you subscribe to our monthly plan. Here's the trading rooms we have coming up. My Q&A sessions are actually for our premium subscribers, but these next two classes here are next Monday, and those will be available for plus subscribers. We also invite you to subscribe, to engage with us on social media. Hit this heart icon right there, and then this like button that likes today's Market Outlook tweet. Same thing if you click on this image, takes you to your Facebook account. Like today's Market Outlook Facebook post that pops up. Again, the more you engage with us on social media, the more Twitter and Facebook will promote our content to the top of your timelines whenever you pull them up. So if you don't want to miss any of our stuff, you have to engage with us, and so we try to make it really easy for you to do that here. All right, now let's take a look at the weekly chart and look at this nice, good bullish candle. We haven't cleared, we haven't closed above these highs. That would be kind of the ideal scenario, and you can kind of see here when you get the reversal pattern, you close above the high. When you get this reversal pattern, you get the transition, then the reversal closes above the high. You get the transition candle, you close just barely, but at least you close above the high. Here we got the transition candle, but we haven't quite closed above the high point yet. So, we're not really out of the woods here. That's why I say be cautious going into next week. We might not be, all aboard the train here. We can definitely get some weakness, and that's one of the kind of red flags that would suggest. Again, when are we going to, when would we know that we've got, enough of a move to the upside would be when we do close up above that level. Here's an example way over here. Back last April, we got a transition candle. We did not close above. It was just 1 point, but we did not close above the high of the transition candle. We got a couple of weeks of weakness and more transitions before we finally did not only close above these candles, but we also closed above this one over here with that close at 26.96. So that's when we know that we have reversed. So keep that in mind. We might not, like I said, be out of the woods yet here. When you take a look at the 3 green arrow chart, obviously we have 3 green arrows, but the MACD is pulling back on the 817. Not quite on the 1226. Well, I actually did finally at the end of the day here. We were kind of flirting with that, but we did pull back on the 1226 too. And also to kind of give you an idea as well on this 817, this isn't quite the surge. I mean, this is still a smaller surge than we had on here, and that was just a 1 month intermediate posture. It's definitely a smaller surge than this one, and that was a kind of more of a 2 month and way smaller than what ended up being, the surge that led to about a three plus month intermediate rally. So that's not the surge that we're looking for. If I were to put my best Jedi mind trick on you, we're not quite there yet. The orange line of the MACD has crossed up above 0, so that's a good sign, and we are still above the 8-day moving average. So good. We're bullish. Just not quite as bullish as we'd like to be yet. There might be some softness before, and again, to kind of show you what that same April 6th time frame looked like back over April 16th, back over here. So we got the bullishness, and then we had some weakness. Kind of like this kind of looks like right here what we look like right now. Now, are we going to get that much of weakness? Who knows? I don't think so. I don't think we're going to retest these lows around 2,900. But we can definitely pull back a little bit, maybe below the 30-day moving average before we get going. And that was even a higher surge than what we had going on right now. So that's the kind of idea that before things really get going, that's the kind of pullback I expect. Maybe down into like this area. So back down into this 29, like I said, 29.50 maybe, and filling in some of these gaps. If you take a look at the intraday chart here, there's the gap. So we still have to fill in that gap down to 296. And I think that's very possible Monday, if not Tuesday. And that's still a question mark too. Now, that could very well be a breakaway gap. We have, there was this diagonal resistance that we did break through. It wasn't a big bump in volume, but it was pretty decent when you look at it on the daily chart here. You don't see the volume on this chart down at the bottom. But if you look at, let's see, where would it be? The 3 green arrow chart. If you look at the volume here, you can see there it is. There's that day of, we did have a pretty decent bump in volume. It did get above average. It wasn't quite 1.5 times, but that very well could be the breakaway gap that we needed. So if we're not going to fill in a gap, that would be the one that we don't fill in. We did a little bit, but not very much. But this one for sure, that is definitely not a breakaway gap. So expect some weakness down to 296. Like I said, Monday, if not Tuesday, and if we go down to 294, don't be surprised, right? That could very well be the case, too, or if we were to pull back down into this area. But you can see, we are closer to the high of the 4-week pattern than we're not. The high point over here, the 4-week high, is about to move because this will come off on after today on Monday. So the new 4-week high point is going to be that one. So that's very bullish to have the 4-week high way over here on the right-hand side than over here on the left. And to have the 4-week low point gradually moving over into this side of the chart too. So, that's what the Arun indicator measures, right? That's what this indicator measures. And so this green line's about to pop up and the red line's about to pop way down. So, that's typical of bullish trends when we get that. And you can kind of see, here's the bullish trend and how long they can last when your 4-week low point is way over on the on the left-hand side of the chart, and your 4-week high point. This is the Arun indicator. This is actually a 25-day. Let's get to the 20-day. Sorry, we'll do a 20-day here. Actually, I'm going to save that so I don't have to keep resaving that. But here's the 20-day. So the top of the Arun indicator is the right-hand side of the chart. The bottom of the Arun indicator is the left-hand side of the chart. The red line is the low tag. the green line is the high tag. So you're bullish when the green line's up here and the red line's down at the bottom, and we're really close to that being the case. The green line's about to get to the top. Well, you can already see it's pretty much almost there, and then the red line's about to drop way to the bottom, and that's what we want to see. Let's take a look now at today's volume and trading range, and you can see the range was under average. The volume was just a little bit below average too at 64 million. Again, you put that in perspective here with 4G, and you can see, under average two some odd points here, way down 2.4, way down here below the average. The volume also just a little bit below the average. Both lines are dropping. Once we get the ATR below 1%, then that's when our trend's established. So again, another sign that we're not quite there yet. From a volatility perspective, we are. So we did pop back up to 15 today. We could very well touch it again. So I was actually expecting us to get to 15 early next week. We got there really kind of on that Boeing news today. But look for it to get closer to 15, maybe a little bit above it next week as we approach 90%. Then that's when any near-term weakness we get will be over. We'll probably hit that resistance, roll back over, stay in the bullish zone for volatility, stay below 15, or get back below 15. That's when we'll say, okay, here we go. We're ready to get going back to the upside again. So to summarize our technical outlook, we are bullish. We have a good, strong bullish trend starting. It's almost like we started the car and we're kind of going uphill a little bit right now. We're not really able to get going, get up to 80 miles an hour. It's like we're on this on-ramp that's got a hill to it. So it's going to take a little bit to get going. And, what does that mean? That means we'll probably pull back a little in the near term before we get up to freeway speeds and we're going 80, 100 miles an hour. So we're getting there. It won't be early next week. It might be by the end of next week by the time we really get going. It might be the week after that. As we saw last April, it might take a week or two of us on this entry ramp getting going before we finally get up to full speed. But the nice thing is we are going to get to full speed. Unless something changes, the market is pricing in that intermediate run starting here. So that's a good sign. So what do you think? Do you agree with that assessment? Disagree? There's a link popping out right there, top right corner of your screen. Hit that link and then vote either agree or disagree. If you click disagree, comment down below on what you're seeing that tells you something different, right? Everybody's got their opinions. I love to hear your opinions, but what's more valuable is what's driving your opinions. What chart, what indicator is telling you something different than what we came up with here, and share that with our Market Scholars community down below. All right, now let's take a look at what's driving price action here. And you can see there's a chart of what happened here this week. The best performing asset class this week was real estate stocks. You can see the REITs up here at the top doing very well, along with small caps, and that's a good sign. And not necessarily the real estate's up there. They've kind of had a good couple of days here to finish the week. But it is a good sign that small caps is up there. So they're doing really well. Developed markets are doing really well this week. Emerging markets kind of matching the U.S., some pretty decent. We did have some weakness here at the end of the week, but considering that crude oil was down most of this week, that's a really good sign for the markets, that they were able to do well without it. Now, again, they won't be able to consistently do well without it, and not until we get crude oil making a run up to the upside. You also see too that the dollar has had a really rough week, along with long-term bonds. Long-term bonds means that yields did well, so I wouldn't expect the dollar to continue to have this much weakness. Here's what the weekly chart looks like for the dollar index. It's a pretty bearish candle coming down to the 200-day moving average. Now the question is, we've seen the dollar test the 200-day moving average before, and it's bounced off of that. In fact, if I look at the regular candles here, you can see multiple times we've come down and tested, even closed below the 200-day moving average, and then bounced back up. And now remains to be seen if that ends up, if we follow the same pattern again. Again, if yields are going up, that we would expect that to happen. Now, you also notice that this breakout that we had above 68, and we haven't broken above the 100 level yet, this 23% Fibonacci retracement on the 78 on the other direction. We haven't broken above that yet, and we're not breaking down. We're dipping our toe right now back into this retracement zone between the 38 and 62% levels. Next week will be a really important week to see if this breakdown is temporary. As you can see, when we get these big moves to the downside to the 200, we can move really quickly. If not the next week, the week after. The week after that. So, but if you take a look at yields have had a really good week here, holding up to the upper end of what happened the week prior. So, and staying above a rising 50-day moving average. There's a big gap here to fill, but towards the 38% moving average. So, if we continue to move up to the upside, there's a good chance that yields make a pretty decent run up to 2% again. In the wake of this idea that the cut. Now, granted, it won't make a significant move. I do expect that there will be a significant move to the upside. It might be after the Fed meeting here in October, after we have the one more rate cut. As you notice, the rate cut odds for October are 91%. So, but after that, you can see the odds of getting a second cut. So here's the odds of getting one cut in December, by the end of December, is 94%. So 91% of that is in, it's actually technically 93.7, but 91% of that is in October. So by the end of the year, we're only expecting one. By the time we get to next April, you can see the odds of getting one cut is 96%. Again, 91% of that is in October. But then by next April, there's a 52% chance that there's a second one. That's it. I mean, that's essentially a coin flip. So the odds of us getting another cut, I mean, they're up more than they were a month ago, but they're pulling back. You can see the chart here. This is what would be the green line, would be the odds of that second cut by next April. If I go back here, you can see it better. So one cut would be the 150. So the second cut would be 120, 150. So if I were to look at the historical charts for that, the 125, 150, that'd be actually the purple line here. That would be the odds of a second cut. And you can see they're still kind of hovering there. The third cut odds, the 100 to 125, is that was the highest earlier this month. And the odds that we'd get three cuts by next April, including here at the end of October, that's the one, right? The one that's this one here, the red one. Most of those odds are here in October, but you can see the odds, low probability that we'd get a second one, with the odds of the third dropping, with the odds of the fourth, this one right here, the fourth, which was pretty high too, relatively speaking. The odds of that fourth cut dropping as well. This kind of reddish line down at the very bottom. So the market is pricing in that we get one more cut here in October, and then potentially that's it. And if that's the case, then by the end of this month, if you look at the monthly chart for the TNX, you can see we've had some pretty bad months, August being one of them. September looks like we're kind of holding with a little bit of an inverted hammer. But then October looking like we might get a long lower shadow in the beginnings of a new run up to the upside. So that's November, December, we might start getting some bullish candles again as the odds of a rate cut come off the table. You'll start to see here. Let's go over here. You'll start to see these odds start to really come down. Not this one, the 44%. But you'll start to see all the rest of the, well, actually, yeah, the 44%, the odds of a second cut, beyond the second cut, would start to really come down to where it's hardly anything. Because actually, by the end of the month, that will be the current. The current one will be this one. That's what the futures market is saying. So that one could very well be down to pretty high numbers actually, of staying the same throughout. See, right now the odds are only 3.8% for the current. So most likely we can get one, but this number will probably start to really go up when it becomes the current. And if that's the case, you'll see the yields go up. And if that's the case, you'll see the dollar typically go up too. And so that might throw this little fake out that we're getting, this breakdown to the 200-day moving average, be relatively temporary. If you take a look at crude oil, which is kind of that important asset class that really needs to get going here if we are going to get this increase in risk appetite, you can see crude oil's been hovering around. It can't quite get a good bullish pattern going. It doesn't have the green line, doesn't have dark green shading. So again, like the Russell, which has been pretty sideways most of this year, crude oil has been too, and you kind of need both of those to trend if the SPX is going to trend to the upside, as we saw both to the upside and the downside last year into early this year. If you take a look at the economic calendar here next week, we don't have a whole lot. We have existing home sales on Tuesday. Going into Thursday, you have durable goods orders and new home sales. And then that's pretty much it. You do have a revision to the consumer sentiment here at the end of the week. But it's a pretty light week on economic indicators. Of course, the focus instead is going to be on earnings. Earnings is going to be way in the focus here. As you can see on this chart, the bigger names that are coming up here, TD Ameritrade, of course, on Monday. That'll be interesting considering the brokerage news that we've had lately. And TD Ameritrade down as much, among all the brokers, down as much as they have been. Halliburton as well on Monday. You can see Procter & Gamble, McDonald's, Chipotle, Lockheed Martin on Tuesday. Boeing, which is in the news, obviously today. That's on Wednesday. Next week, Twitter, Visa, Comcast, some of these other Intel on Thursday. And then finally Friday morning, a few names, Verizon included. So a relatively big week. You can see the week after, that's when you have a bunch of big tech names, Apple, Facebook included the week after that. So a lot of big names coming up on the earnings calendar here, that started this week and continuing on to the next week and beyond. So that will be kind of more of a focus, more so than the economic calendar will next week. And of course, the week after that, this will be that last week in October. Not only is it a big earnings week, that Wednesday the 30th, but that's also the FOMC meeting where they're expected to cut rates. So probably a little bit of a calm before the storm next week with the news events that are coming up. All right, now let's take a look at how the sectors have performed this week. And you can see the best performing sectors is healthcare sector. That's, in fact, we have in our directional option strategies, we have our best trade right now is in that sector and had a really good close of the week here. So that sector did really well. Real estate, as I mentioned, is up here too. You can see financials bouncing up with the rise in yields this week. At least the yields held up this week, so they're doing well. There's a couple discretionaries kind of showing you the bullishness of the week. On the flip side, technology was down, energy was down, along with crude oil, not surprising, and utilities and staples are lagging, along with materials. You can see materials and industrials lagging behind, even with the weak dollar. Now, usually they do pretty well. Materials, industrials, energy, they do pretty well with the weak dollar. The fact that they all lagged on a pretty down week for the dollar kind of tells me one of two things. Either they're about to bounce up significantly, or the dollars drop. The stock market didn't put a whole lot into that dollar drop. That that most likely that dollar is going to bounce back up again. So you can kind of see what's going, but that software sector, the software industry within the technology sector really dropped down. Of course, you have Boeing too impacting here in the industrial side, but within the technology sector, there is that little pocket of weakness. So that leads us to our trade idea of the day. Now remember, this trade idea we've already put on today in our Market Outlook live video. So the one that is for the Plus subscribers, we did put that on before the market closed. But if we go in and take a look at it, the stock that we looked at was ADSK inside that sector. You can see the breakdown. Now it had a pretty decent drop after its earnings, but then rallied after that. Now it looks a lot more bearish. It's got the bearish pattern, the red line, dark pink shading. If you take a look at its three green arrow chart here, you can see it's got three red arrows. Here we go, three red arrows there with the MACD and stochastics. Stochastics rolling over with the phantom red arrow. Here's what it looks like on the daily chart. You can see the MACD pulling back down below zero, below its moving average. Stochastics as well. Pretty decent pickup in volume. You can see how bearish this drop is relative to what we've seen here both the 8 and 17-day moving averages below. You can see on the weekly, we've been kind of holding the 8-week moving average and are breaking back down away from it. You can see how bearish the MACD is, and the stochastics rolling over on that as well, forming a phantom red arrow. If you take a look at its Bollinger Bands here, we're below the point of control. We're moving into the lower end of the value area towards support at 128. You look at its DMI, and you can see here, on the DMI, you can see that, here we go. The negative directional index jumped up back up above 30 with the positive below 20. That's a pretty good indication that we can get the ADX rising above 20, which leads to more of an extended downward move. If you look at the trend strength indicators along with the Ichimoku cloud, you'll see that we are below the cloud. We're below the green and blue lines. The green line's below the blue line, and we're starting this bearish trend. That's on the daily chart. If you look at the weekly chart, you can see we're also dropping below the weekly cloud here and starting a bearish. It was still noisy, but starting a bearish trend potentially there as well. With earnings coming up after November expiration, that sets us up for a potential opportunity to sell the 145, buy the 150 call vertical spread here before expiration. So this is what it looks like on the trade. You get your, here, pull this off. There's the trade right there. You get your maximum reward of $372 if we stay below. Of course, if we can get halfway there, then we'll take the trade. In fact, we've done that. For those of you who have been following some of the recent market outlook trades, there was a couple that we closed out today in the live video that did reach 50% of their max gains. So if we do get to that, we'll take that one on this trade too. And that tends to happen on the bear calls if the price does drop, because calls lose their value so quickly. So that can happen pretty quickly on bear call spreads. Not as quick on short puts, but they can. Again, that depends upon the price moving in the direction, right? To get that 50% really quick, and then you move on and try to get the other 50% on the new trade. So that's kind of what we're looking at on this stock. You can see it would have to get back above 147.5 essentially for us to get our maximum, to take our $372 loss on this, because we want to at most take a loss that's equal to what we're trying to get, and that would essentially mean that we're pretty much rising up above these candles that we just broke down below. So it'd have to pretty much nullify whatever the word is, this breakdown that we've had. And you can see also a nice little breakdown below the lower Bollinger Band here too. That could very well lead to more of this. This one broke down on the earnings, and we bounced back up into it. This one looks to be a little bit more of a sustainable breakdown that can start pushing down below the slower band towards support. And again, we don't need it to go too far down. We just need it to stay down below this blue line. That's the break even. It needs to stay down below that blue line if we want to try to get our maximum reward out of this. All right, well, that wraps us up for today. You've heard from me. Now I want to hear from you. Use that link that's popping out in the top right corner of your screen, and that takes you to our Market Outlook forum on our Market Scholars community. Open up any new thread you want there with any questions or comments about what we have. Remember, that's one of the benefits of our free subscribers, is that they can participate in that forum there. So open up any threads. Let's keep this conversation going. Reply to other people's threads. Love to hear your thoughts and share those with our community. Thanks again for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment down below, follow me on Twitter for more content, like this in between the videos, join our Facebook group we've created for Market Outlook. Remember, I'm gone next week, so no Market Outlook videos Monday, Wednesday, Friday, and then Brandon will be here on Tuesday and Thursday, and then I'll be back with you on the next Monday. All right, thanks again, everybody. Have a great weekend, a great week next week, and we'll see you next time.